Hello and welcome to this edition of Investment Insights. I'm Jamie Gordon, editor at ETF Stream, and we're delighted to be joined today by Sophie Hunter, Senior Capital Market Specialist at Vanguard. Sophie, thank you for joining me.
Thank you, Jamie. It's great to be here today.
Could you talk to us about a few of the trends that are driving this massive increase in ETF choice we're seeing out there today, and how sort of investor demand shaping this increase in sort of product offering?
I think it's important to first start off just by acknowledging the huge growth that we're seeing in the European ETF market. So we crossed the $3.2 trillion mark at the end of 2025. That's $2 trillion more than in 2020. And internally, what we're forecasting is that by 2030, that will reach $6.3 trillion. So huge growth there, and that would represent over a quarter of the total European funds landscape. With this increased growth, what we're seeing is increased choice in the market as well. We saw that really playing out last year. So we saw over 280 new ETFs launched in the market, and also over 25 new issuers coming to market as well. Now, I think in the context of this growth, it's important to note, take a step back, look at the bigger picture as well, and really the bulk of the flows are still the same. They're still going into those core, diversified and low-cost strategies. From a demand perspective, we're seeing a few interesting trends play out as well. So firstly, the increased adoption of ETFs by retail investors. This is a huge growth area with the launch of more digital platforms, of course, ETF savings plans as well. They're really enabling newer investors, younger investors, easy access to the markets via the ETF wrapper. Another key demand trend that we're seeing at the moment is how ETFs are being used from an asset allocation perspective. They're increasingly used as core building blocks, as well as tactical asset allocation options as well. We're also seeing a lot of increased innovation in the market as well. So part of this is, of course, in the active space. So we've seen it with fixed income. We see this as a really exciting area of the market. We think it's a great time to be in fixed income. There's higher yields, there's greater dispersion, and we see a lot of opportunities there. Additionally, we're seeing ETFs being launched by issuers to allow investors to have a particular view on the market as well. So we're seeing this in terms of maybe structural views, it might be AI, for example, or even geopolitical views. So we've seen the launch of lots of defense ETFs in Europe, for example. Now, this is a small segment of the market still, but it is growing. At Vanguard, we think choice is really important. We think innovation is important, as long as it keeps the end investor in mind. So at Vanguard, we're excited to continue to expand our product range across fixed income, equity, and multi-asset strategies, but we're always focused on delivering that low-cost, diversified exposure that's going to deliver real long-term value for the end investor.
Sophie, you mentioned this vast amount of innovation, new product development that's happening across the entire ETF spectrum here in Europe, from thematics to actives. What are some of the things that investors need to be aware of when thinking about trading some of these newer listed ETFs, both in those more esoteric areas, but also where ETFs have traditionally found a home in the core? What are some of the key components and, I guess, some special considerations that need to be made for those newer products?
Exactly, Jamie. As we're seeing this huge growth in products coming to the market, investors are increasingly encountering these less mature products when they're thinking about making investment decisions and considering how to trade. I think what's really key for investors to understand is that the liquidity of an ETF is not just defined by the trading volumes that you see on screen. So a product can be relatively new in the market, it can have lower on-screen trading volumes, it can have wider bid-ask spreads, simply because it doesn't have that natural two-way secondary market flow yet. So what you see on screen is really just the tip of the iceberg. And what's really important is what lies underneath that, and that's the liquidity of those underlying holdings of the ETF itself, and the ability to efficiently create and redeem against the underlying fund via an authorized participant. That's where the true magic of an ETF lies. It's really as liquid as its underlying holdings are. So you could have an ETF that only trades, say, in the thousands in notional terms on screen, But actually, that ETF can support trade sizes of in the hundreds of millions, billions even, as long as that underlying liquidity is sufficient. Now, that's also important from a cost perspective. So sometimes what we hear from investors is they can be nervous around trading newer listed products. They're not sure if we can accurately predict cost outcomes, for example. And what I would say there is that really isn't the case. We can accurately and robustly predict these based on that underlying liquidity again. Timing and strategy really matters, but partnering with a dedicated ETF capital markets team, for example, can ensure that there are no surprises and investors can get the outcomes that they're looking for and the quality of trading execution that they're looking for as well.
So look beyond the shop front and dialogue with your capital markets team to sort of important takeaways there.
That's exactly right. Partner with your capital markets team wherever you can. They can help guide you in making these decisions and understanding the overall market.
Sophie, thank you very much.
Thank you, Jamie.
And thank you for joining us for this edition of Investment Insights. Do join us next time where we'll be speaking to Owen Moran on the Vanguard capital markets team about whether more choice is a good thing for investors. Until then, take care.